Okay. So tell me real quick, are you seeing the slide that says, it's got my face on it, it says Trading Coaches Playbook? Is that the one you're seeing right now? Yes. Okay. All right. Let's get going. All right. So as you saw on the introduction to this class, when I look back at previous classes, it just dawned on me that I, of my own nature, am inclined to, you plug in a nickel and you get 25 cents worth of stuff. You know, my kids would always say, Dad, just give us the 5-minute answer instead of the half-an-hour answer. Or how about a 30-second answer instead of a 4-minute answer? When I get talking on something I'm passionate about, I tend to just go. And sometimes I guess it's entertaining. Other times I dominate and don't get enough feedback. So I thought, you know what? Of all of the things that we've talked about, all of the trading situations that you guys are in, why don't we just have a class where we can literally just dial up and dive into anything that I've talked about in the past. So there I'm on the camera here, just so you can see I'm here. Anything I've talked about in the past, and this covers charting, this covers pattern trading, this covers option trading, this covers market psychology, this targets what we talked about last time, which is correlation. And I wanted to just open it up and start throwing out ideas and just see where it goes. And the ideas are going to come from your questions. And what I love when somebody has a, well, for example, if I'm teaching, one of my favorite things to do is to start out by saying, what do you remember from last week? Everybody hates that question. But the truth is, if you can't remember anything, then I didn't do a very good job, right? I really didn't. There should have been something that stuck. So I'd invite you to just let your mind relax, think back on other classes that we've had, on situations you're in right now, and or questions you've got. Guys, we've got a crazy market going on right now. There's geopolitical stress. There is internal economic stress in this country. There are people with interest rates that are trying to figure out what the heck is going on. It certainly affects my industry that I do in the construction industry. So there's just a lot of questions. And so I wanted to interrupt. If I'm talking, if I'm going like this, it's normal not to feel comfortable interrupting. So I'm going to let that be the rule of the day. Okay, to interrupt. And once we start down a rabbit hole, I don't know where it's going to go, but what happens is one person's question will spark somebody else's question. That'll spark the next question. That'll spark the next question, and away we go. Okay. So we can go any direction you want. I've got charts up that we can pull up and use for examples. I've got a whiteboard that I can use, but I'd just like to dial in today on whatever it is that you guys want to talk about. As a reminder, we always remind you that we're not talking about any specific situation. So if you ask me a trading situation on a current trade you're in, I'm going to be very limited in what I can answer. I'm not going to shy away from it, but I'll tell you what I can, and I tell you what I can't talk about, because we can't give recommendations on anything that you might actively trade on. It's just, we're not literally not licensed to do that. I was licensed as a financial advisor, a licensed credentialed financial advisor, and I could give people financial advice in certain circumstances. There were some things I couldn't advise them on their taxes, but I could on their finances. And so that's what these disclaimers are for. There's very particular limits on what you can say depending on what you're licensed to do. So in this case, it can't be on a specific trade, although if it's a specific trade, I'll tell you what I can say and what I can't say. Okay, I'm not afraid of that. All right. So go ahead, and Jennifer says psychology of the trade. Give me an example. Give me a question. Paula says current patterns and candles. Okay, fantastic. This is a good start. Now, what I'd like you to do is to drill down on each one of those things, because my response could be essentially, that's a great subject, or that's a great thing to bring up. Why do you bring it up? Okay, specifically why? Why do you bring that up? Okay. Brenda says, I would like a refresher on something you taught in my earlier years, and that is to explain what it means to listen with your eyes. Okay. I recently saw a show, you guys, by Cesar Millan. He's the guy in California, in the LA area, that is the dog whisperer. He's got his own cable show, and it's fascinating, absolutely fascinating to watch how he works with the psychology of dogs. He's just learned how to read them. And it's a combination of some verbal actions, but pretty much everything he does, the vast majority of what he does, is with his eyes. And when he is engrossed in trying to help somebody understand their dog's behavior, he's watching them. And you'll see that his comments are always relative to what he is seeing. Sometimes he'll make a comment on what he's hearing, but it's mostly seen. And so, Brenda, the idea is that nobody can teach you how to trade Microsoft or Google or Tesla. Nobody can teach you to trade it better than Tesla or Microsoft or Google. In other words, the company's behavior on a stock chart reflects everything that happens to that company. It reflects the board meetings that are held and the actions of management after the board meeting. It reflects the earnings reports that come out and the reaction of the public to the earnings reports. In other words, you don't have to know everything that is happening behind the scenes to be able to see what the impact is. Okay? So when I say the stock is trying to tell you how to trade it, it literally is. It's trying to tell you how to trade it. But you have to listen with your eyes, because the auditory is going to be, it'll be confusing, Brenda. By the time you get any auditory input from a company, it's usually filtered through a representative, which is then reported by a reporter, which is then interpreted by the staff, who, the editorial people, who say, well, I don't want you to talk about it that way, but you can talk about it this way. So by the time you hear something or you read something, it's usually been filtered. Whatever is going on behind the scenes, and by the way, usually there's something else behind the scenes that accounts for whatever it is that you are seeing. Okay, you don't hear everything. You just don't. And sometimes by the time you hear it, it's already baked into the cake, it's already done. But everything that is relevant shows up in the chart, Brenda. If there's a great earnings report and the chart doesn't move, what does that tell you? What does it tell you? If there's a great earnings report and the stock doesn't move, it tells you that that news on that earnings did not change traders' minds. Why? Well, number one, they could have expected it. Number two, right, because the news was already out. Number two, the traders just don't care, right? There could be any number of reasons. But the point is that what was the value of that great earnings report? If you look at the chart, it was nothing. Well, I didn't hear any details. Well, you don't have to hear any details. If nobody did anything, it tells you everything you need to know. So, Brenda, if you have a pattern that starts to repeat when earnings come out, you look at that and you say, okay, what were the earnings? What was the reaction? Go to the next quarter. What was the earnings? What was the reaction? What was the news? And you may start to find a pattern. Patterns are fantastic because they show the trail. It's like smoke coming out of the back of the airplane. They show the trail left behind by those who are in the know and those who follow those that are in the know on any particular stock. So if you learn to listen to what the stock's trying to tell you, it'll be in the chart. It's not going to be in the news, but it is trying to tell you how to trade it, how to teach it. Okay. So Brenda, follow up on my comment to make sure that that's helpful, or you can steer it a little bit different. You can steer it to customize the answer to what your question might be beyond that. So give me some feedback on that. Does that make sense to you? That chart is going to tell you everything that is going on with that stock and their news and the board of directors and the way the public responds. And you kind of reverse engineer it. You say, okay, let's see, this is what happened. What was going on? What was in the news? Well, you may find out a week later that something happened that wasn't even in the news, but that was the thing that explains what happened that day in the stock. Okay, well, that's fine. But if you would have reacted to what happened and played what happened, you wouldn't have had to known what the news was. This is kind of after the fact. You look for the patterns. Once you find a pattern, you play the pattern until it breaks. Brenda, I need some feedback from you. I'm trying to answer your question. If I was looking at you, I could tell if this is working or not. She said, very helpful. Yes, it makes so much sense. So I will study the heartbeat of the stock. Exactly right. It is literally trying to tell you if you'll learn to listen, but you have to listen with your eyes. All right, Jennifer, you said psychology of the trade. Let's see if Jennifer gives an explanation. Okay, here we go. Okay, I think I have a weird fear of success. So it makes me take a long time to study before I dive into anything. Well, I have a little bit of understanding of that. I've had a dose of that myself. I've always done well in life, but I feel really slow to make progress because I'm hesitant. Okay, well, Jennifer, in general, they say that the market, and this is really important to grasp this, Jennifer, they say that the market is driven by two emotions, fear and greed. I've heard that my whole trading life. Jennifer, I believe it's not true. I believe it's not true. I believe the market is driven by one emotion only one, and it's fear. Okay, well, what about greed? Well, what is greed? Have you heard the term FOMO, guys? FOMO, FOMO. What does FOMO stand for? Somebody's got to know that. Type it in real quick. Jennifer, if you know it, type it in. What does FOMO mean? FOMO. Fear of missing out, Bonnie says. Excellent. So good to see your name there, Bonnie. I can smile. I can see your face. Good to see you. Okay, so Jennifer, fear of missing out. When people act greedy, what does it look like in the market? So let's just talk about this. I'm going to answer your question, but I'm going to loop around a little bit to set up my answer. When people are greedy, what does it mean? What does it look like, guys? And I like the interaction. You don't have to raise your hand. Thanks, Bonnie. You don't have to raise your hand, but just type it in. What does it mean? What does it look like? What does greed look like? Paula, bring that question up. Bring that question up. That'll be yours when we get to it. All right. So what does greed look like, people? Come on, type something in. I would just point to you and you'd all answer if I pointed at you. So please, I'm pointing at you. What does greed look like? If fear and greed are the two market emotions, what does greed look? Holding out for more profit, Andrea says. Perfect. Perfect. Greed, trying to get the more out of a trade or the most out of the trade. And Tripp nails it. Guys, can you see Tripp's answer? He nails it. You'd think he'd hung around fun, smart people before. Guys, Tripp's a fun, smart person to hang around with. Charles says you wind up empty-handed. Okay, I'll take that. Michael says wanting more, but wanting more than you think you deserve. Well, guys, greed looks like people who are trying to get too much. They're holding on too long. They won't let well enough alone. They made money, but they want to make more. Okay, it's FOMO. It's back to what Tripp just said. It's fear of missing out. When people stay in a trade too long, why do they stay there? Why do they stay there? So I'm going to draw a mind picture with you guys. Okay, a stock starts to turn. It's just beating you up. All right, you just lost some money on the stock. You traded into it thinking it was going to go up and it went down and you stopped out. But there it was. It went right to a support level. It pulled back far enough to take you out and now it takes off again. Is there a fear of getting back in that trade? Yes or yes? I'm assuming you're all saying yes. There's a hesitancy. And that was the word that was mentioned before. It was hesitant, Jennifer mentioned. Yes. Okay. So you're hesitant. So you wait. And you think, well, if it comes back down and does that again, I can get in this time. But it doesn't. It keeps going. Now it's going because other people are jumping in. Now, the analogy is you might go to the work that day and you'll hear people in the break room or whatnot talking about, oh, I just jumped into that stock, man, and it's up another $3 today. And you're going, oh, shoot, man, I just got tripped out of that thing. I want to get back in, but I'm still wincing from when it got me, but it looks like it's going and everybody else is jumping in. So you hesitate, and finally you go, okay, I'm getting in. And you do, and it starts going up. And you're feeling, oh, finally vindicated. And then it hits a resistance and it starts to pull back, and you haven't made very much money yet. In fact, as it pulls back, you're thinking, shoot, if I get out here, I'm going to break even. And it starts to pull back a little farther and you're going, oh no, no. Then it starts to go back up again. You're going, okay, we're okay. And now it's making some money. And it goes up and it hits the resistance point again, and it stops, and it pushes across the resistance a little bit, and you're getting really excited. You got in late, but at least now I'm making some money. And then it pulls back. Okay. And then it starts to move up a third time. And if you're not paying attention, you're seeing the formation of a reverse head and shoulders. And anybody who got in down at the bottom is seeing this reverse head and shoulders, this hesitancy, this inability to push past the resistance point. And they all start to go, okay, I'm done, I'm out of here. And you're seeing people jump and move, and you're going, oh, wait, okay, maybe I should get out. But if I get out now, I'm not going to make anything. I think I'm just going to hold on a little bit more, because at least I want to get out with a little bit of profit. And the next day it tanks. Okay. You had a profit. Someone would say, you should have just taken it. You were greedy. You were greedy. And you weren't greedy. You were afraid. You were afraid that you would miss out, because the last time you got out, and you got out too early. It just got out on a little pullback. And so you saw this little pullback, and it had already pushed through the resistance, and it pulled back a little bit, and you held on, and boom, you got hit. Now, I can give you 5 or 6 different scenarios, but the bottom line is, even when people are saying, oh, they were greedy, they're not. They're not greedy. They're afraid, because they're afraid if they get out, it's too early. They'll get out and they'll miss out. Even if they've made a big profit, people will sit there and ride a stock back down too far because they were trying to hold on, thinking they were going to get more profit, right? That's greedy. Well, no, it's fear. Now, I'm going to put the icing on the cake for you, Jennifer, then we'll go to the next question. Fear of what? Guys, write this down, please. Tripp doesn't need to write it down. He's got this memorized, I know, because I beat it into his head. Write this down. You have no control over what happens in the trade. You may get educated. You may know a strategy very well. You may be very confident in it. And you may be consistently making money. You have zero control of what's going on. There is a part of your brain that knows, that absolutely knows, that you are dancing with a gorilla. You are playing with something that you have zero control over, that could turn around and eat you in a heartbeat, and there's nothing you can do about it. When we trade, guys, there is an underlying current of fear. There isn't anybody in this room who walked out on a 10-inch wide plank 50 feet in the air. Now, if I draw a 10-inch wide, 6-foot line on a floor, 6 feet long, 10 inches wide, and ask you to walk out to the end and walk backwards, you could all do it. Nobody would fall over. Make it a foot wide, okay? But if I hang that 6 feet out over a 50-foot or a 100-foot or a 200-foot cliff and say, walk out to the end and walk backwards, back to safety, There isn't a single one of you that wouldn't be afraid, because you know that at any time, anything that goes wrong, this is life-threatening. It changes your emotions. It changes your disposition. You can't think clearly. Everything is focused on don't die, don't die, don't die, don't die. Okay? And when you trade, there is a part of your brain that is going, oh my gosh, oh my gosh, oh my gosh, I have no control over this. Even when you feel comfortable and confident, that is in a frontal lobe, that's in a conscious part of your brain. In the subconscious brain, you're not an idiot. You know you have zero control. Oh, I have stops in place. Okay, good for you. But you have zero control of whether or not those stops are activated. In fact, once you get stopped out a couple times, oftentimes people will stop using stops because of fear. They're not afraid to lose money anymore. They're afraid of not making money because the stop keeps taking them out. They're not afraid of losing money. They're afraid of losing the opportunity for the big run that happens afterwards because they got out too quick. And so now they'll change their strategy. Well, my stop must be too tight. So they'll loosen it up, and then it goes back and hits the looser stop, and they go, oh no, now I lost even more money. And all that does is reinforce the fact that you have no control. So Jennifer, the psychology involved here is that you have to start with the understanding that you have no control. You have to assume that you can have a trade go against you. In fact, you bargain with the stock and you say, I know that this thing could turn around and bite me. I'm going to define how big of a bite you can have. Now, that is not a loss, Jennifer. When you say, I will give this stock a $1.50 pullback, that translates into $950 on my option trade. I'm willing to take a hit. I'm willing to pay the market $950 to find out if I'm right. Well, why would you go into the trade if it could cost you $950? Because if I'm right, if the stock does what it looks like it's going to do, I could make $4,000. Yeah, but you could lose. No, I'm not going to lose anything. What do you mean you're not going to lose? I'm not going to lose. I can't lose any money. I will put the money up and say to the market, you can have this. If I'm wrong, oops, did I say that? You see, if I have no control over it, I can't be right or wrong. So here's the psychology of it. I know I can't control this trade, but I can see a pattern. If the stock follows a pattern, if big IF, if the stock follows the pattern, then it will go to here and I will pick up $4,000. Well, that's pretty cool. Has it done that pattern before? Yes, several times. And it looks like it's going to do it again. Oh, well, that's the incentive to do it. Yes. Well, then if you're right, no, it has nothing to do with being right. If the stock does what it looks like it's going to do, I'll make $4,000. Okay. If it doesn't, it'll cost me up to $900. Are you willing to make the deal? See, Jennifer, now you can kind of reason with your subconscious and say, well, of course I don't have any control of this. Of course I don't have any control. I'm not trying to control it, but I'm seeing a pattern here. And if it follows that pattern, it'll be worth $4,000. If it doesn't, it could cost me up to $900. Are you willing to take that risk? Are you willing to make that trade? Now, if you say, yeah, I'm willing to make that trade, Jennifer, you cannot lose a dime. It may cost you $950, but you can't lose a dime. And if you can try to work that into your subconscious, guys, it will allow you to trade something you have zero control over, except the cost. You can control the cost. That's the beautiful thing. But that's all you can control. You can't control the profit. You can't control the profit. You're going to make what you make. When you decide to exit, you control the exit. That's all you can do, guys. You pay money to step into the trade, and you put up X amount of money to get you out at a certain point. And why do you do that? Why would you put up a system that guarantees that if it goes against you, you are going to pay X amount? Because, guys, the market messes with your subconscious. And right now, when you're setting up to make a trade, you may feel totally conscious. You may feel totally rational. Everything's fine. And then all the little anecdotes about the military where the best plan survives until the first bullet is fired. In a fight, your best game plan in a fight goes out the window as soon as you take a punch in the face that you didn't expect. The plan's gone. So you have to recognize that I am probably not going to be able to execute rationally if things go against me. Therefore, I'm going to decide ahead of time what my fate is. If the stock does not do what it looks like it's going to do, it's not personal. It's not personal. But I don't want to get caught where I get sucked into an emotional whirlpool that will take me down and it'll be disastrous. Therefore, I am limiting what I'm willing to pay if this doesn't work. If it works, I can make up to $4,000. If it doesn't, the worst it'll be is $950. Do you still want to do it? That is the mindset you have to have. Jennifer says cost control. That's it. Exactly. It has nothing to do with losses. And Jennifer says that actually helps me. Booyah. Mic drop. I can leave. I helped somebody today. Jennifer, that is the big thing that really I've never heard anybody else teach it that way. I'm not taking credit for it other than I did come up with it, and I'll give credit to somebody, whoever may have taught it to me, but I don't know who that is, and who may be already doing it for the last 20 years. I don't know who that is, but I'll give them credit and bow down, okay? But to the best of my knowledge, that's something I had to learn the hard way. And it's true. I've never seen it proved otherwise. People get confident when they get successful, when they have a few trades going their way and they'll turn 50,000 into 600,000. They think they got it. And as long as it keeps working, that's great. But there's no guarantee. And what happens typically is when it goes against them, I'll tell you the story real quick, Jennifer, and then we shift gear. Marty Weinstein was one of the legends on Wall Street a few decades ago. Okay. Absolute brilliant, made millions and millions of dollars. He set up a trade. It was a commodities trade. And the thing turned on him. When he not only was confident, he'd already spent the money, Jennifer. He had a trade set up that was going to make him $2 million. He had actually set the plans in motion through phone calls to build a house, a retirement house. And this was decades ago. So out on Cape Cod, $2 million then could build a real nice house out there. He already had the plans for the house going because of this trade he was in. It suddenly turned on him, and he watched it turn, and it cost him not only what he risked in it, but because it was commodities, it cost him more. And his friends after the fact said, Marty, what's the matter, man? Why didn't you get out? I would have got out. I know you would have got out. What was wrong? And you know what he said? Now, this is an experienced, successful, brilliant trader that everybody looked up to. He was written up in a book about the famous traders of his time. He says, I don't know. I couldn't move. He said it was like I was watching myself laying in a ditch, bleeding to death, and I couldn't do anything. And he watched it auger in, and it lost more and more and more. And he said it was when the bell rang, when it was over, it was just a big relief. He just felt a big relief. He'd lost, I don't know, millions maybe. I don't remember what the dollar amount was, but he certainly didn't make the millions that he was going to build his house on Cape Cod with. It cost him big time. And his answer, when it turned on him, as hard as it did, as fast as it did, it froze him emotionally. He couldn't move. Now, the rational Marty, stepping back out of the picture looking, would have told him what to do. Oh, yeah, hey, you've been here before. You do this and this and this. But it caught him off guard. And once you're off guard, you just get sucked into it, into a vortex. And you just watch stuff happen. And you feel relieved when it's over, even if it costs you. So that's kind of a long explanation, but I don't think I could have told you anything more important, you guys. I was aimed at Jennifer, but I hope everybody else got something from it. You have no control. That's why you use stops. That's why you say everything before a trade starts. You've thought through every scenario. You've got your exit strategy planned on every scenario. And then you sit back so that you don't get sucked into a knee-jerk reaction if the market turns against you suddenly. Everything is already pre-set in motion, so you don't have to make the decisions with bullets flying around your head. And you're not going to be reacting to winning and losing. You're not going to trigger those emotions because it's not about winning and losing. It's about doing the right thing in each moment, and the winning and the losing takes care of itself. The winning takes care of itself if you just do the right thing in each moment. If you got a good plan, it's just the way it works, guys, and it just doesn't get any simpler than that. All right, thank you for those who said that was good. Tripp says, I try to set up as much as I can in my platform before the trade kicks off so that I don't get into my own way. And he said, I kind of learned that from somebody else. Yes, you did. All right. Well, let's see. Oh, Michael says, I read visual. Seeing things helps me helps focus your attention. Correct. He says, I think Caesar, he thinks like a dog. He watches the actions for clues of what the dog is doing. Yeah, it's amazing, but he sees with his eyes, right? He listens with his eyes. Everything is tied back to what he observes. All right, so let's see. What was the next one? I hope I don't miss anybody, but let's go back. The next thing before that was Paula, current patterns and candles. So Paula, you got to give me something specific to work on. A more specific question. Charles says, you always taught us to learn the behavior of the people trading that particular stock. Yes, that's what's in the pattern. It has become much harder with the swings in equities. Absolutely. So what are you learning from it, Charles? What we're learning is that the market, i.e. the people trading it, are completely off guard. Right now, everybody's kind of off guard. So Charles, when the little kid comes to the mom and is crying and says, Mommy, it hurts when I do this, what does the mom say? Well, quit doing it, right? It hurts when I touch here. Well, don't touch there. It hurts when I pull my hair. Quit pulling your hair. Guys, there is a rule in trading that when the patterns quit working, stop trading. My rule is this, okay? If you want to write something down, I mean, that's the generic thing, but my particular rule that I teach is, if there's no pattern, there's no trade. You got it? If there's no pattern, there's no trade. Yeah, but it looks like it's going up. Okay. But where? I mean, what's the pattern? Why would you expect that it's going to go far enough? You know, you've got to be able to look backwards. Guys, past his prologue. Past his prologue. If you can't show me why you should get into a trade, and you can't do that unless you can look backward and see a pattern. And if it gets wonky, quit doing that. Right? He says it becomes much harder. Correct. And if the swings become, Charles, if they become where you can't make sense of it, back off. Just stop until it does make sense. Then you can ease back into it again. But when the markets get wonky, guys, Mommy, it hurts when I do this. Well, then don't do it. Okay. All right, scroll down here. Paula, there we go. I don't seem to be able to see patterns or understand candles. I just don't see them. Okay. All right, well, we're talking about a world that is dominated by visual acuity. I assume that you're not visually impaired, Paula. And I don't say that jokingly. I'm just assuming I can't see. But if you can see okay, then you see patterns all the time. I mean, that's how we survive, by recognizing patterns. So you can see patterns and you can understand candles. You just haven't had patterns shown to you to where you can start to recognize it. Paula, what happens when you buy a red car? All of a sudden, everybody's got a red car, right? You see red cars everywhere. Once you recognize a pattern and you trade into it, especially if you trade into it, you're more likely to see it the next time. If somebody shows you a pattern and then they have you look at a chart and you spot the next one, you're more likely to be able to use that pattern and to use it and to recognize it again. So it's just a matter of experience, Paula. There's nothing wrong with you. Okay, so we'll work on that. Let's see, Jennifer. Okay, I'm scrolling down, trying to catch up. Okay, hang on. I'm just reading. Jennifer, I needed to hear that. Okay, I got that. Oh, wait, there's a little bit more. She says, I feel like I have some control based on chart strategies, but I really don't accept my stops and exits. Jennifer, I'm scared of the words you use. I feel I have some control based on the charts. You don't have any control. Jennifer, you have zero control over anything that's happening on that chart. Your ability to recognize patterns only allows you to see what might happen, or what is likely to happen, but you have no control. You know, it can look like it's going to do it and then go the opposite direction, right? So just don't use that word. The only thing you can control is your exit. So Jennifer, another analogy I like to use, guys, is you buy a ticket and you go in to watch a game, or you go in to watch a performance of any kind, whatever the medium it is you're being entertained with. Pretty sure there's people that are not going to allow you to go down and climb on the stage and join the performers. I mean, if you don't like the movie, you can't get into the movie. You can't go stand in front of the screen and be in the movie. It just doesn't work. You can't go on the football field and be part of the football team, right? You can't get up on stage and play with the band. The only thing you can control, Jennifer, is I'm leaving. I don't like this game. I don't like this performance, right? You can leave, but you can't get on the field. The problem is in life, we have been taught, it's been beat into our heads, hang in there, don't quit, be tough, stay in the game, get in there, fight. You can do it. Quitters never win, winners never quit. It subconsciously, Jennifer, projects us into whatever situation we're in, as if, because it's true in many situations in life, if you do participate more, you do affect the outcome. But in trading, everything you've been prepared for in your life that has defined success to you doesn't work. Nothing that's been prepared for you to be involved with that's been successful is prepared you to be successful in trading. It doesn't work. So you're looking at a board and you've learned to be really good playing checkers, and these guys are playing chess, and you're going, wait a minute, I used to be really good at this. How come I don't even understand the game, right? It looks the same, but it's not. So you have no control of what's going on the field. And the things that you've done that have been successful in life, the characteristics and the skill sets and the mindset, are almost backwards of what you need in trading. You have to go in there acknowledging, I have zero control. I may have information, but I have zero control. The only thing I can do is leave at the right time. I'm profitable, leave. Okay, good. But it kept going. Okay, fine. Did you want $6? Yeah, I want $6. Did you get $6? Yes, I did. But everybody else got 12. So, well, I want 12. Why? Well, because, my friends got 12. Yeah, but you said you wanted 6. You got 6. That's a perfect trade. And all you can think about is, yeah, but they got 12. You see how crazy that is? It plays with your head. I went into it to get 6. I got 6. That's a perfect trade. Yeah, but my friend got 12. That's the poison, guys. It just screws with your head. Now that's going to tend to make you stay into a trade longer because you're afraid to miss out on the 12 that might happen. And you'll lose the 6 trying to get the 12 that might happen. Guys, it's just a different game, and you've got to have a completely different mindset to play it, because the things that have made you successful in the other aspects of your life will make you crash and burn in the market. It just does. It's just frustrating, but that's what happens. All right. It's hard to keep up with and follow this and go back and forth. Let's see, I don't want to miss, but I'm afraid I might miss. Okay, Jennifer, I got that one. Then we had Brenda, Trip, we got that comment. This mouse just jumps too fast. Paula says, I guess I'm not very visual. But no, Paula, everybody's visual. Paula, you can recognize all kinds of things in your life. You do it every day. You probably, you look at Brenda, can you type? Can you type without looking at the keyboard? Maybe you can. Well, you're visualizing the keyboard. You can see it without looking at it. There's all kinds of things that will give evidence that you can. You just need to work on it, and I'll help you. Okay, Charles says, I still use your bracket trading worksheet. Well, fantastic, because that forces you to lay everything out and set your controls. Coach, what does it mean past is prologue? Well, the most accurate, you've heard me say, Brenda, that the most accurate indicator of what a stock will do next is what it's just done recently. You say, well, when the stock's in this position, it does this. Really? How do you know that? Well, 6 years ago, when it was in this position, it did this. And 5 years ago, when it was in that position, it did the same thing. Ah, that's great. And I would say, what did it do? Look back here. What did it do last year when it was in that position? Well, it didn't do it, but 5 and 6 years ago, it did. You see, oops. The most current is the most accurate at predicting what it will do next, Brenda. Does that make sense? That's what I mean by past is prologue. And the most recent past is more important than the more distant past. Okay. Paula says, I should concentrate on a couple of patterns and work with those for a while. Yeah. But, Tony does great classes on pattern trading. I cover pattern trading. Rob talks about pattern trading. I'll give you some examples here. I'll give you a little more help here. Yeah, there you go. So Charles is talking about an analogy of a picture all in dots that I used to use and illustrate. Guys, sometimes you'll see pictures that it looks like just a bunch of dots on the page, but if you just stare at it and let your eyes relax and change the focal point, suddenly a picture comes into mind, and people are going, I see it. You see the dolphin jumping out, and somebody else will go, I don't see it. Brenda, that's what you're feeling like. Oh, everybody else is seeing it, I don't see it. As soon as your eyes get in the right spot, Brenda will go, oh, okay, I see it. But it's learning how to pick it out amidst all of the other stuff that's going on. And once you see it, it'll be easier to see it again. You just have got to have a little help seeing it. Charles is exactly right. And once you do, then you'll be able to see it easier the next time, and you'll be able to pick that stuff up. Okay. Good comments. All right. Well, let's see if we can. Let's see. I'm going to go to let's do a screen sharing. Let's see, where's that? There we go. All right, are you guys seeing the chart? Okay, perfect. All right, so let's help Paula out here for a little bit. Paula, I'm going to switch this. This is a picture of the S&P 500. It's up to date through yesterday. I'm going to switch it to a line chart here. And I'm going to see if I can find a pattern in here that it might be easy for you to pick out or somebody else to point out. Can anybody just look at this and see a particular pattern, some trading pattern that you're familiar with? And you could say, oh, look at November, or look at 22, or look at August 22, or look at March 23. So just look at this chart. And Jennifer is saying, okay, I like what you're saying. I'm not going to say it out loud. I just want to register a few of them, and then we'll go over it. Then we'll help Paula figure this out. Who else can see any patterns on this that you recognize by name that you could point out? Good, Andreas. Keep going, guys. Helen, Andreas. Good answers. Good answers. Nice. All right. Let's hold up on that for a little bit. I'm going to back up because, well, let's see if I can stretch the chat. Yeah, I can. I can stretch it up and I can see a lot more. Okay, the first one that popped up here was Jennifer said head and shoulders pattern in December. Now, December is right here. All right. So Jennifer says head and shoulder pattern in December. Jennifer, I would question that this is a head and shoulder pattern. I can see it, but it would be hard to pick this out in real time. But let's go over it. Guys, you see where my line is? The head and shoulder pattern, you would have to say it's this one, and this one. There's a shoulder, there's the head, there's the shoulder. So Paula, a head and shoulder pattern is a failed rally followed by a higher rally that also fails, followed by another lower rally. And then when you go through the baseline, you're done. The pattern reverses and you get a reversal pattern. Okay, so I'm going to do a couple of things here because I'm not disagreeing with Jennifer on the head and shoulder pattern. I just want to make sure that you know how to recognize this. Hold still. All right. There's our congestion area right in here. But you see, Jennifer, you've got this little double top right here. And guys, by the way, if we take this, see what's going on here, Paula? And you may say, well, I didn't see that. Okay, that's fine. But you did see that this runs up here. So when it runs up, the first thing we want to do is try to put a base under the bottom. When you have a trend moving up, we don't care about the tops as much as the bottoms define the trend. Okay, and if we go back to a candlestick, we get even more confirmation on it, but I'm not going to go difficult on that. But this is a beautiful uptrending pattern. There's one rotation. There's a rising bottom. There's another rotation. And now it rolls sideways, sideways, sideways until it hits the resistance and it starts up again, or support rather, and it starts up again with another double bottom, right side up. And then when it breaks down, the pattern is broken. So is this a head and shoulders pattern? Yes, it is, but it's a little muddy, Jennifer. So I'm going to take just a minute and I'm going to reach over and I'm going to take one of the other head and shoulder patterns that was pointed out, and that's this one right here. Okay, here's another one. It's not a perfect classic one, but it's pretty darn close. You've got a rally up, there's a shoulder, there's the big push that fails, tries, and then as it comes back down through the support area, boom. Now, this one, by the way, was pretty strong looking because you had a rising shoulder level. If the right shoulder is higher, there's a tendency for the trend to keep on moving up. But if it looks really strong and then it breaks, look out, because it's a head fake and you've got all this weight up on top. You got this big head. Once it falls, it rolls down. It falls down. Okay, so that's a head and shoulder pattern. This one that Jennifer pointed out is a head and shoulder pattern, but it's based or it's embedded in a larger pattern. That Jennifer, the point I want you to make here is that this other pattern is the one that helps you identify whether or not this head and shoulder pattern is significant. You see how cool that is? See how powerful this head and shoulder type of a pattern is when it works into this sideways motion, which is what? It's retracement. We have an upside move, we have a pullback. We have an upside move that matches, tops and bottom matches. I have 1, 2, 3, 4 points, which it takes 4 points to make a trend. Can I segue on that real quick here, guys, for just a minute? An upside trend is defined by a support and resistance line that are parallel. They don't have to be perfect, but they're close. Now, it is defined by 4 points. Point number 1, when you look back on it, is a rally point like this. Point number 2 is the retracement. When it starts down, there's point number 2 right there. That makes point number 3. It starts to rally. Hey, we have a trend. No, we don't. No, we don't. Not yet. Guys, we have a trend when and only when it moves up and recognize, plus or minus, closely recognizes this. Now, 1, 2, 3, now you've got a trend. You've got a baseline that's believable. You've got a top line that confirms you have a trend. I used to say it takes 3 points, 1, 2, 3, but this is a projected. This is theoretical. If you don't get this 4th point, you really don't have a trend. Here we do. Therefore, the significance of breaking that trend was the reason to get out of that trade. It's confirmed by the fact that you were pounding in a base and you refuse to go below it. Boom, 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 boom. Now you're breaking your long-term support line. You've got the head and shoulder pattern, and you're breaking this baseline. There's 3 good reasons to jump into that trade when it dropped and go bearish. Okay. All right, what else we got? Andrea says double bottom in October 22. Well, here's October 22, and we've got a double bottom, but also this was, see, this is a nice big, what we call a double bottom. A double bottom is better than a knife point turn. A knife point turn would be a single point, even if it's a support line, which is great. A double bottom is stronger because the market tests it. They establish that, nope, nobody wants to go below this. Well, then that means they must support an upside. Yep, and away we go. And so we have a nice rally that comes out of that. All right, Helen, double top in November. So we go over here we go back here in November. Well, this double top right here, well, this double top where both of them went higher puts it parallel with this and gives us our formation of a trend line. So I agree. Good call. Andres says head and shoulders late November 22. Did we just get that? That's this one right here. Okay. Jennifer, inverted head and shoulders in January. Okay, I like that. Jennifer saying, what about this for an inverted head and shoulders? I could give it that. Shoulder, head, and shoulder upside down. Yes, but you could also, I can't grab the corner. I want to make this smaller. Anyway, you could also do this. You would not be wrong if you just called this a frying pan bottom. A frying pan bottom is where you come down and you don't get a double bottom. You don't even get a triple bottom. You get a quadruple. You go bounce, bounce, whoops, bounce, bounce. You have 4 bounces and 1 slip across the line. That makes what we call a frying pan bottom. And that's a good solid signal that, hey, we're done with the selling. We're ready for something else. Well, what is there else? Keep going sideways or go up? That signal right says, well, let's go up. And up it went. Okay. But could you call this a head and shoulder, reverse head and shoulders? Yes, you could. Okay. And Paula, I hope this is helping you because these are good examples, just looking at the S&P 500 and being able to pull out patterns. Let's see. Okay. Let's see. Jennifer, October is better. I don't disagree. Paula says, yes, that's helping. Thank you. All right, guys. Well, we just hit our time. See how fast an hour goes. Let me point out a couple of other things on this chart, and I'll just aim these at Paula. And that is, you see where this thing levels out right here? That's not a coincidence. That's major resistance. The S&P 500, just look at this. This week, we came up and we threw a shooting star at our resistance level once, twice, 3 times, 4th time up to this level. The shooting star is that small body with a tail that reaches up across the line and pulls back. It's like somebody who gets scared. They peek their nose around the corner and oh, I don't want to go there. I saw a shadow. I'm scared. And now it's pulling back. So is it going to go all the way down? Well, I don't know. What I do know is that it's right down where it was a week ago, yesterday. And so you have to look and say, what is it doing today? Did it break through to the downside or did it bounce? You see? And if you didn't know what it did today, you could take this as significant either way. If it rallies up from here, your target is right back up here. If it breaks down below, the target is down to the next support level. The next good support level, by the way, the next really good support level is going to be down in this range. Why did I drop below this last tail? Well, I did it because there's a lot of traffic down there. And so now, realistically, if somebody would say, what's your target? Your target is not a single price. There's too much history, too recent. These are outliers, these little tails here. Look how many times we hit this line. 1, 2, 3, 4, 5. 5 times we hit this line. Look at the static right in the middle where we bounced off of this in March. If we lose this pattern, there may be some intermediate support along here, but the traders would feel really awesome, the ones who can trade it to the downside, if it went all the way back down to this double line. And all it's got to do is get in the area. Once it's in this area, it's subject to a rally again. And if that doesn't work, hey, we want to scare everybody out of the pool. You know, you yell shark or alligator or whatever, and we'll send them down here. Okay. Right now, your resistance level is right here. Your support is right here. And if you break it, there's a real potential that it could drop all the way to the double lines. I don't even care what the numbers are. I look at this picture and I say, boy, there's a bearish entry point. There's the target. There's my stop. The odds are good. The pattern suggests that kind of a move. See, guys, I know I'm going over. Just give me a minute. So Paula, look, if you broke this and you started into a bearish trade, you would say, well, what is the potential for this to drop? Could it go all the way down to here? Well, look what it did here. See, Paula? Same place. It dropped that far and bounced. If you lose this, don't think that anybody's forgotten. This was just last month. This was 6 weeks ago. Boom, come on down. Party's still going. The fire's still, the coals are still warm. It would be easy for the market to slam down here. It did it there. It did a drop that same size there. It did a drop the same size there, same size there, same size there, same size there. You see, to drop this many points, that big, it's done it repeatedly over the last 6 months, 7 months. So the expectation that it could take a drop that big, well, heck yeah. That's realistic because it's recent history. So now you have a target. Set your stops accordingly, and whatever it does, it does. Jennifer, whoops. It's been good to chat and to see what everyone else needs and help with. I like that. Bonnie, do you ever consult Elliott wave patterns? No. I don't disrespect Elliott waves, but I see an Elliott wave. I could give you several indicators where somebody goes around holding a pattern in their hand, looking around the chart to see if they can make the pattern fit the chart. Okay. When the Elliott wave is simply analyzing the fact that generally, okay, Jennifer, generally patterns that repeat get weaker. That's all it means. An Elliott wave essentially says you're going to see a weakening pattern. Well, sometimes that works. And when it does, you can say, see how good, see, it's perfect. See that? And I go, yeah, move that over here. Does it work? Well, no, it doesn't work there, but it works right here. See? Okay, yeah, great. But I don't want to spend my life carrying this model around seeing, oh, this one, and all you're seeing in the pattern is it worked then. But what about now? You see, looking at the Elliott wave, it can target what it thinks will be the next move based on that depreciating wave theory, that waves get weaker. Okay, I get that. But patterns don't always work. Patterns are inconsistent. When I see a target on a trend line, that will tend to matter or to match up on some wave pattern. Okay, great. That's great. But what if it breaks? Well, in the wave pattern, well, then I don't have a trade. Well, I'm going, well, wait, sure you do. Sure you do. Look, if that didn't hold, here's the next one. You see, if you're able to see targets from the previous behavior of the stock patterns, you'll never run out of targets. Bonnie, you're awesome. Love you, girl. That's all I can say is I have great friends and you're a low maintenance friend. Thank you, Helen. I appreciate it. Raju, what pattern is most reliable? Raju, the pattern that's most reliable is the one that works the best on the stock that you're looking at. And I'm not being facetious. I'm saying I can give you a pattern that works good on a certain stock, doesn't work on another stock. Okay, there's no pattern that is a universal pattern. Head and shoulder patterns set up and fail a lot. They don't always go down. But if you've got a stock that responds, Raju, to head and shoulder patterns, well, then it's likely to respond to head and shoulder patterns. What if you've got one that sometimes it works, sometimes it doesn't? When you say, well, this is a great pattern on that stock, but it's not a good one on this stock. Oh, you see? And there may be a great pattern that you just can't find because nobody showed it to you. That might be it, right? No, the truth, Raju, is you look back at the past, the stock. I'll go back to my very first premise in talking with Charles. Raju, the stock, the traders, looking at the chart, it will teach you how to trade that stock. Don't go around with a pattern trying to find a stock that fits your pattern. Find a stock that you can see the patterns in. And whatever that pattern is, that's the way that stock trades. Now you can trade it. That's what's going to be most reliable. What if you've got a stock that has a sequence? It does a 2 rotation or a 3 rotation pattern. It pulls back, and then it does a 3 rotation pattern, but it never does a 4 or a 5. Okay? Patterns go 3 to 5 times. What if you find a stock never does 5? The most it ever does is 3, ever. You look back over 5 years, it's never done more than 3 rotations on an uptrend. Well, now, Raju, you've got a great pattern, but it's not the 3 rotation pattern. It's the one that works on that stock. And now you know that there's a strong probability when you play that stock, you get to the 3rd rotation, it's going to break and you're going to have a downside move. Well, hooray, you've just unlocked the golden ticket, right? You've just unlocked the golden ticket of how to trade that stock. And it's going to be different than some other stock, but you found the trick to that one. Guys, it will teach you how to trade it, but you have to listen with your eyes. Paula, I think you're better at it now than you were when you came into class. And hopefully what you got out of this is how to start looking, how to start recognizing. Guys, I just had the S&P up here, and look how much we got out of it just looking at 8 months, 10 months. And there's more. But those lessons are in there on almost every stock. All right, guys, thanks. I appreciate the accolades. I really, really do. That tells me that you're getting something out of this, and that's all I want. I just want you to be smarter when you leave here than when you came in, and that it wasn't a waste of your time. That's just because I love doing this, and my enjoyment comes when I see the lights go on in somebody's eyes. All right. And if I'm not around and you ever have a question, just ask Trip. I'm just kidding. But what I'm saying is that some of you guys have been with me for a lot of years, 15 years, maybe more. And so a lot of the things that I say I don't have to come up with new stuff all the time. These are things that everybody needs to learn. So repetition is the mother of skill. We keep going over them. And even Trip and Charles and some of these guys, and Bonnie, that have been around for a long time, they will tell you that when they hear the basics, oh yeah, that's right. And sometimes going over something for the 5th or 6th or 20th time, you'll get another nugget and you'll go, oh my gosh, I just added on to what I already had. Can I get an amen from anybody on that? So, don't ever resent basics. Guys, I love doing basics because when you learn how to learn, you learn how to go back and see all the things you missed when you thought you had it the first time, just like a teenager, right? You spend your whole life learning all the stuff that fell through the cracks when you thought you knew everything. All right, everybody's on board. Take care, guys. God bless. Lee, thanks for helping out today. We'll see you all next time around. Bye-bye.